Hi there, everybody. Wanted to touch base with everyone today. I was originally going to speak in a Russian accent, but I have a terrible Russian accent. So instead, we'll just get right to it. A lot of craziness going on, and Lance and I wanted to touch base with you using technology in this maybe post COVID world and reach out and get to as many folks as we possibly could. So thanks for taking a few minutes and listening to us, and let's just get right into it. I'll turn it over to Lance for you.
Yeah, one of the biggest things, we've been getting a lot of phone calls, emotions are running high. And that's one of the things that we really bring to the table is we don't want to let emotions get in there and take control of our investment decisions. We've worked hard to come up with that game plan, and we want to make sure we stick with that game plan and have that balanced portfolio. Because all this other noise, I know right now, front and center, we got Russia invading Ukraine. Who knows, in a week or two, it might even be China invading Taiwan. We're going to have the Fed raising interest rates probably here in the middle of March. All that is par for the course, and we're expecting these things to happen. And when we sit down with you guys and we come up with that game plan, we factor this into that. So I know Rob's going to go over a few slides with you and show you the facts of what actually happens. It's been a while since we've had a correction, and we realize it's very scary. So that's why we wanted to reach out to you today. We're here for you. If you can't sleep at night, pick up the phone, give us a call. We are here for you 24/7. So just rest assured that we are keeping an eye on things and you are right where you should be. So I'll pass it over and let Rob talk a little bit about some of the facts that actually goes on Wall Street.
Yeah, thanks for that, Lance. So yeah, you guys have seen it on the screen. I've had it on there for since we started the video, but it always seems like this note card, if you will, and you'll probably get one in the mail, becomes relevant every couple of years. Really, it should become relevant every single year. So what we're going through right now is absolutely a market correction. And again, market correction is defined as a 10% pullback. But guess what? This is all factual data that's on here. Whatever you're hearing on the news, it's opinions, okay? So typically we average at least one market correction a year. On average, that's at least 14%. What's interesting, though, is we haven't had a true market correction since the COVID crash of February and March of 2020. We were pushing 2 years. So we were long overdue for this, and here we are. It's not a matter of if, it's a matter of when and why. Well, the when is now. Here we go. The why, obviously, like Lance said, Russia, Ukraine, interest rates. But we don't never know the when and the why. We just know it's going to happen, just don't know when. So, additionally, daily dips of 2% or more occur about 5 times a year. We opened the markets down 2% today. Today is one of those days. We've had a handful of those this year already. Last year, we didn't have many. So, again, overdue for that. Every 5 to 7 years, the markets decline by 20% plus. We're not quite there yet on the big indices. The Dow, the S&P 500, we're not there yet. But the NASDAQ touched up to that today. The Russell 2000, 3000, the more broad market, that definitely is over 20% in decline right now. And again, the last time we experienced something like that was COVID crash, March, February of 2020. 75% of the time, markets rise on average 3 out of 4 years. It's pretty good odds. We'll take those odds. Another thing, over long periods of time, the markets significantly beat inflation. What's been the headline news lately? Inflation. Interest rates are going up. You can count on it. Where do you want to go to kind of help your beat the inflation rates? You want to be invested. Inflation means asset prices are rising. What are we investing in your portfolio? We're investing in assets, and they should also rise with inflation. This is pretty relevant right now. We're getting a lot of questions. Oh my gosh, I need to sell. I need to run for the hills. Put my money in the mattress. Listen, selling low and buying high never works. And again, we're long-term investors. We've had 23 months almost of the markets being on our side. It's really, really hard to pinpoint that 1 month that's going to be down and selling right before that and getting right back in the lows. It's not possible. So, that's why we come up with a game plan. Each game plan is unique to you guys. Lastly, the TV. It's crazy. You're getting all this mixed messages. Turn it off. Don't listen to it. Fear sells. Okay? You can check your accounts every day. I get it. I do the same thing. But that is our job. You're hiring us to check your accounts on a daily basis. Let us do it. But if you need to, I get it. Call us. Reach out to us. We're here to help. And lastly, never make important decisions based on emotions. I read an interesting quote this morning. I think it was by Jesse Livermore. He said, the markets are never wrong, but emotions and opinions usually are. So be careful of making knee-jerk reactions, because knee-jerk reactions are typically the wrong reactions based on emotion. Okay. Lastly, real quick, I'll just go over this chart. It's really fast. This goes back to 1980, and it shows the top 10 largest daily declines in the S&P 500 since 1980. Most of these are from either the financial crisis of 2008 or the COVID crash of 2020. There's a few others sprinkled in there. The number one, though, is October 1987. It's Black Monday. In one single day, the market was down over 20%. Then we get into COVID crash, financial crisis, back to 87, financial crisis, COVID crash. Basically, these are the largest intraday moves that we've seen, declines actually. What they all have in common is the following rates of return, either 1 year, 3 years, or 5 years. A couple of them we still don't know because we're not 3 or 5 years out of the COVID crash yet. But the moral of the story is you get these big single day moves, and the following year, 3 years, 5 years, even 3 months a lot of times are typically positive. It's like a 95% success ratio following those big moves. We weren't even close to that today. I think at its worst, I think the markets were down maybe 2% today at its worst. The smallest day on this chart is just a little over 6.75%, and we were nowhere close to that. If you remember March of 2020, we were getting 1,000+ point moves a day. Today we saw like 600-700 points as of right now. There's a lot of time left. So anyways, thank you guys for tuning in. Again, call us with any questions you might have. Got my phone ringing at the same time. Lance and I got our sleeves rolled up. We're ready to work. We're ready to go. Don't worry. We got this. We got our finger on the pulse, and we're here to help. So by all means, reach out to us, call us, and we look forward to talking to you guys soon. Thanks, guys.